so much, Nick. Thanks for Halotax for hosting this, and also thank you, Dan, for going first and starting the unsexy webinar. You might be thinking that it started off from sexiest to least sexy, but it's definitely got unsexier now that I'm here. So I'll let everyone else decide. Right, let me just sort this out. Set up. Hopefully I'm sharing the right screen as well, because Dan, I think you were sharing the wrong screen there, mate. One other thing as well on Link My Books, for anybody who's not a user, we at Ecommerce Accountants use them for all of our bookkeeping clients and strongly, strongly recommend them. Dan isn't an accountant, but he knows so much about that. So I definitely recommend that you use Link My Books if you're on the fence about what to use. Anyway, into this presentation. So first of all, who am I? Who's this ugly bloke who's sitting here talking to you today? My name's Joe. I'm an ACCA chartered accountant, which basically means I've done a bunch of exams. And prior to that, I was an Amazon seller. So in 2012, I had a very similar story to Dan. I started an Amazon private label business. We got to, it grew really well. We had, I won't go into that too much because I've only got 10 minutes. But basically, the business got to the point where I effectively sold it. And in 2016, I started Ecommerce Accountants because although I was a chartered accountant, I realized that there were no accountants in the UK that specialized in working with e-commerce businesses. And at that point, we didn't have things like Link My Books. So when dealing with Amazon sellers, things were way more technical. Currently, we work with over 300 businesses in the UK and around the world. So like, not gigantic, but we kind of work with quite a lot of businesses. VAT is probably one of my favorite taxes, which I think is why I was invited to this unsexy webinar, because what's more exciting than that? The reason for that is that there's so many different facets to it. Corporation tax, those of you that deal with stuff in the UK, very basic. Income tax is a bit more interesting, but VAT, there's loads of different components and aspects to it, where what type of products you sell, change things, where the goods are stored, the value of the goods, all of that impacts whether there's VAT or not. In this kind of brief summary, we're going to make a few assumptions. So I'm going to assume that most of you or the people that listen to this are not in the UK. I'm going to assume that you're an Amazon seller, so you're selling goods on an online marketplace, which is an OMP. We're going to assume that you're actually selling goods, and by that I mean physical goods, and we're going to assume that they're standard rated products. So first of all, what's VAT? And also, how exciting does this slide look? I really love it. So VAT stands for value added tax. It's a sales tax in the UK. So if you're in the US, VAT is your equivalent of sales tax. If you're in Australia, New Zealand, it's the equivalent of GST. And in the EU, you've obviously got VAT there too. And it's a tax on the end consumer, which means that basically value passes all the way down the chain, and any business that pays out VAT claims it. I'll go into that in a second. Who needs to register for VAT? So in the UK, there's an £85,000 turnover limit. However, if you and your business are based outside the UK and you supply any goods or services to the UK, there's a very, very high chance that you actually need to register for VAT from the very beginning. There's also a caveat that if you expect to supply goods or services in the next 30 days, you need to apply. But in practice, HMRC can't really enforce that. But in general, if you're planning on selling goods in the UK, you should register first. And as I said, there's no turnover threshold. So if you're going to make a shipment of goods to the UK, make sure you register. Who does not need to register? And there are some instances where you don't need to register. Based on the assumptions that I used earlier, I'd say that it's businesses that store goods outside the UK. Well, the definition is if it stores them outside the UK and sell them on an OMP or an online marketplace. So in this instance, if you're an FBM seller, so you're storing goods in, say, a US warehouse and you're shipping them to UK consumers after selling them out on Amazon, then most of the time Amazon should be collecting the VAT and you don't need to register. There is some instances where you might still need to register and they'll tell you, but in general, if you're shipping and storing your own goods, you might not need to register, but it's kind of quite rare from what we find. So what is VAT? So it is, or sorry, how much is VAT? In general, I mentioned before, the standard rate is 20%. You can get sometimes when 0% or 5%, but in general, it's 20%. And to kind of give a more relevant example for people in the US, in the UK and in the EU, we don't add sales tax at checkout. So our pricing usually contains VAT. So we're often surprised when we go abroad and you buy a bottle of water, you see it's $1, and then at checkout it's like $1.30. Kind of annoying. In the UK, EU, that doesn't happen. So if you sell something for £100, it should actually be, you'll be inclusive of that. And at the bottom there, I've shown that the way you calculate your selling price is you divide it by 1.2, and that will give you the VAT component. So if it's £100, 83.33 is the selling price, and actually there's £16.66 of VAT. And how does VAT work? Again, very simplistic overview here, but you have two types of VAT. You've got input VAT and you've got output VAT. Input VAT is the VAT that you pay on purchases to all of your suppliers, and output VAT is the VAT that you collect from your sales. Kind of sounds backwards because input VAT, like, from your purchases, really money coming in is from your sales and output is from your purchases, but it's to do with the invoices. So the invoices going in and out. So if you're issuing an invoice to someone, it's output VAT. Either way, what you would do is you look at all your input VAT, you look at all your output VAT, you deduct all your input VAT, and you get the net result, which is a VAT, usually your VAT liability. But if you've got a load of reclaims in there, you can also get, it could be an asset, so you're getting money back. Now, the other thing to note is usually it's a quarterly VAT return that needs to be prepared and submitted to HMRC. Now, if you're an overseas business, you might be asking, what VAT am I going to be reclaiming? I'm not paying any VAT, so how am I going to get, what money am I going to get off my VAT bill? Well, you might have import VAT to pay. So when you ship all your goods into the UK, you're usually charged VAT, although there's now the postponed VAT accounting, which I'm going to talk about on the next slide. But other than that, there's not really much you can reclaim. So it's kind of more straightforward than if you're a UK business. If for some reason you're charged VAT by someone with a GB VAT number, let's say your accountant charges it by mistake, which would be a bit bad, but or Link My Books issue you a VAT invoice, then you might be able to reclaim that. But in general, services and the way they work, you shouldn't be charged much VAT. Postponed VAT accounting was introduced in 2021, and it essentially cuts out the whole, the faff of having to pay the VAT and then reclaim the VAT. So it allows businesses to essentially declare it and recover it on the VAT return. You might ask, what's the point? I think HMRC want to see it for sort of internal reporting. Effectively, it preserves the cash flow of your business. It's a completely optional scheme as well. So if you're not on the PVA scheme, speak with your shipping provider, because it's a bit of a no-brainer, as there's no point paying it out and then reclaiming it when you can just not pay it and delay it. A couple of other points on VAT. So you've got three main schemes. So you've got the standard scheme, which is the most common and which most people deal with. And that's essentially where you do a VAT return, like I explained, every quarter, and you have 4 quarters in a year. Or you have the annual scheme, which lets you do one return, and then you don't have to worry about it for the rest of the year. The problem with that annual scheme is that if you've got reclaims, so if you're a UK business and you've got a lot of expenses, it's very difficult to, it's basically you can only do the one return, so you can't be reclaiming stuff. And you also need to make advance payments towards your VAT bill. So sometimes it's not good for cash flow. And it's also for smaller businesses, so those with less than 1.35 million in turnover. The other thing that's pretty interesting and that gets overlooked sometimes, especially for non-UK businesses, is the flat rate scheme. And that's where you pay a fixed rate of VAT. You have to be like really small, so you have to have less than 150k of VATable turnover to join. But if you're starting off and you're expanding into the UK, definitely something to think about. You have to leave the scheme when your turnover is above 230k. So if you're listening to this and your turnover is already 200k, you can't join it, even though you could have if you were less than 150k and still been on it. The way the flat rate scheme works is you still collect the 20% VAT, You can't reclaim any input VAT. So rather than looking at how much VAT you've collected and how much you've paid and working out the net figure, you just look at the amount of VAT you've collected and then you apply a percentage to it. So in this case, I've shown that if you collected, say you made £1,000 worth of sales, you'd have had, if we divide that by 6, we have 166.67 of VAT that was collected, and so technically due to HMRC. And then if we look at the flat rate scheme, we would times that 1,000 by 7.5, which is 75, and the difference between that is 91.67. So really, again, it's a bit of a no-brainer in most instances for an e-commerce business because you're saving money. If you're a non-UK business, you've not got much VAT to reclaim. So again, it's a good way to pocket the difference. There is a warning and a caveat to that, and that's that you still have to apply the percentage to zero rated goods or 0% VAT goods. So if you've got a high proportion of goods that are getting shipped out of the EU, if you're selling coffee or sort of baby supplies, you don't ever want to be on the flat rate scheme. And there is another warning, which didn't fit onto this slide. You've got, there's a new concept of limited, well, new, it was brought in 2016, the concept of limited cost traders, and those are businesses that spend less than 2% of their VATable turnover on goods. If you're caught within that, so if in a period you spend, in this example, say you've got £20,000 of turnover and you spend £400 on goods, sorry, if you spent less than 400, you would be put on the 16.5% VAT rate, flat rate, rather than the 7.5%. So you might actually mistakenly have been having to pay basically more VAT. Either way, the rules are really complex, so speak with an accountant. That's my quick crash course on VAT. Sorry if I've been rambling on like a madman, but clearly I love it. Put some next steps here. If you're a non-UK business, at Ecommerce Accountants, we do provide UK VAT services. So usually we charge £95 to register for VAT and £195 when someone signs up, and then £50 a month. But if you've listened to this, when you get in touch, we waive the £195. Please quote it to myself or Stefan, who deal with all of our new client inquiries, and we'll be happy to help. If you're a UK business and you're listening to this and you already know everything about that and you're interested to talk and switch accountant or engage an accountant, we provide a range of services: accounts, tax, bookkeeping, VAT, reports, loads more. If you quote this and say that you've watched this webinar with Hello Tax, then we'll give a 10% discount on the first year's accounting fee. And I'll put a thing for questions, but we're going to do that at the end. Thanks a lot.